Hello everyone, this is Own Wall Street with the TradersPerspective.com. Taking a look here at the US dollar, starting off the analysis on the weekly time frame as usual, just to kind of keep things in check. So, this week kind of panned out with one of the scenarios that I had discussed in my last video, which is where we saw the US dollar basically come back down and test this 200 period moving average and also test those lows, which we'll get back to in a second as I jump down to the lower time frame. But as you can see, the overall weakness is just still persistent. So I would say that we're probably going to go ahead and touch the bottom wick here, as you can see back here. That was around this 92 level, and there's a potential for an extension down to the 50% FIBO level here at around 91.33 before we see any type of significant bounce occur. So it looks like we're going to get a little bit more extended on the sell side, and then we'll see some kind of a retracement. So dropping back to the lower time frames. Here's the 4-hour time frame. You can see that we did in fact go ahead and test this low and also actually breach it. Now I mentioned that that was a possibility in my last video, and if this level does end up holding, then what we're going to be looking to see essentially is a bounce up here to come back and test this 92 level, or let's call it 93, but basically in that area here. As you can see, we had some support trying to be made here, which I identified in my last video, but my computer actually crashed earlier this week, so I don't have everything in here that I had before. But it's if you really want the reference points, just go back and view the other analysis that I did last week in the US dollar playlist. So just taking a look at the lower time frame down to the 30-minute, you can see that this is where we kind of just broke down really hard, and that was right near this 200 by 50 moving average resistance. We still have a little bit of a gap up here. Just notice that. So that's near 93.55 or so. So there's still potential for a little bit of a bounce. We do have a few wicks here. It was the end of the week and late in the day when things started to get a little bit interesting. Otherwise, it was pretty much a lame duck day. Not much happening overall. But in general, even though we have these wicks here, from what I'm seeing, any type of a bounce would be short-lived until we kind of started to test some things. And the tests that we're going to be facing are going to be this 50-period simple moving average first, and then we're going to be looking at basically testing this 200 and up to this level here. So again, we do have an intersection here, and I mentioned that when things are going up, heading into this cross, which they started to kind of come up, immediately the next candlestick was a violent thrust downwards. So study up on those. Just a little tip for you. But in the grand scheme of things, this meltdown basically came late on a Friday, so there's probably lower volume. So I would imagine that we're probably going to see a little bit of a bounce at some point in time. It's very difficult to really call the move at this juncture, but if we did see a bounce, again, be looking at essentially bumping up against this 92.80, 93 level as a basically just like the first real test where we had price really trying to stabilize. We were riding this uptrend line here on this 4-hour time frame, but things just didn't pan out. So the option happened where we just broke down, tested, and then failed. So now that we tested this, you would assume this would be a double bottom. There would be a little bit of a recovery at minimum. So I would say that if we get back above this 92.60 level and then head back up, we could possibly test this 93 level. And if we happen to fail to get back above that, then going back to this weekly view, you can see that that's when everything kind of comes into play, where that will be a failure to get back above this 200 on the weekly time frame. So failure to hold this 200 near this 92.60 level, roughly, as it shows right here on the right. So around this 92.60 level, if we do happen to fail that level, and then we'd be looking at, as I mentioned, over the past few weeks, probably lower than 92 at around 91.90, 91.80, with a potential extension down to this 91.28 level. So I'll update you all on Wednesday evening as part of my bi-weekly video updates, but for right now it's going to be kind of tricky, it's going to be choppy, and I was hoping that we'd have a little bit better direction, but of course It's just the market. It's unpredictable, so we're just going to have to be patient, ride this out. Stay on the sidelines if you want. It's not the worst thing to do. In fact, in situations like this, sometimes it's the best thing to do if you don't have a clear idea of what's going to happen. So, we all expect a bounce to happen at some point in time, but it just hasn't materialized yet. We are getting, close to that level. It looked like we might start seeing something here, but if we do not see this level here hold, then we're going to be coming back down lower, and potentially with an extension lower. So just do keep in mind, whenever you look at these charts, try to look left and see if there's any type of similar pattern. And the only thing, that I would really see here is that we might see something like this where we have a small gap down and then we'll have that, candle wick here signaling that we've come to a bottom. I mean, we have two of them now, and we really just need to see if this is going to hold or if this is going to break and go lower. I still think that we may have a little bit lower to drift, but that'll be determined on these lower time frames. So again, as always, I suggest look at the 4-hour time frame. That gives you a very nice breakdown on what the price is doing. If we happen to get back above this level here around 93, then we'll be going further up to test this 93.45, 93.60 level, essentially this downtrend line here, and that will also coincide with this 200 and this downtrend line here that we have on the daily time frame. So overall things look a little bit weak still. There's a potential for a technical bounce here. It's just a matter of how hard and strong this bounce will be. As you can see, we still have a lot of confluence going on here as far as these moving averages really coming in, and this downtrend line here, which was this more aggressive downtrend line. So we'll have to see when this bounce exactly happens, but looking at the daily time frame here, you could really see that even though we did test this low, we broke below it, which still signals an overall bearish sentiment in the market. So keep your eyes peeled to the US dollar and also the dollar yen pair. That is also doing some interesting things. I've been sending my members some of this information just to kind of point this out to them. So it's going to be a very, very interesting upcoming week, and I know I say that a lot, but it's an interesting time right now overall. We have a lot of things that various turning points, and there could be a new inflection happening with the US dollar, with gold, with natural gas even. So it's difficult to call right now, but you have your overall perspective, which is that there's more bearishness to come, just that we're getting very close to seeing some kind of a bottom put in before a nice technical bounce and retracement back up to maybe 97 or so. But that's going to be in the few weeks upcoming. That I don't really see that coming up this week at all, unless something drastic happened and there was some massive move for some reason. But in either case, by Wednesday, I highly doubt that we'll be anywhere near that level. So I'll update you all Wednesday evening as usual. I'm on Wall Street. This has been a presentation of thetradersperspective.com. Hope you all had a wonderful weekend, and I hope you all have a great start to your week. Thank you for watching.